What is going on, Lunatic Fringe? The revival of Terra Luna Classic is very real. It is very close to happening, and it doesn't really have anything to do with altcoin season. Altcoin season is going to help for sure. We want to see that nice pump, but revival, that's the important part. And guess what? The USTD project is probably the catalyst that will take it to that next level, and it will go fairly quickly. I'm going to show you what I mean. By the way, this might mean USTC. We're going to need to leave in the past, or at least there will be a small group of people that continue to trade it, but you want to make money. You're here to get rich. You're here to innovate. You're here. There's a lot of different reasons, but most people, they want to make a little bit of money. Okay. And this is a money maker. I'm going to show it all to you. Make sure you hit the like button on the way in, and let's get after it. All right, step one, instead of ass say buns, sign up for my channel. If you don't, okay, but hit the subscribe button at least. TerraCasino.io for all your risk-based gaming needs. Did you vote? Did you bet on the Bears this weekend? Oh God, my bad. All right, I didn't know they were gonna be this bad. I didn't know that. I didn't know. Did you bet on Notre Dame? Whoops. All right, guys. TerraCasino.io. Also, Teraport.finance for all of your utility and meme coin needs. Right now, the L2s are where all of the transaction volume is. Now, that could change in the future, but for right now, the best place for you to trade Luna Classic is Teraport.finance. Sign up there today. Okay, there is a signal. It's getting ready to happen here. It's going to be the SDK 5 point. That's the SDK 0.5 upgrade by Orbit Labs. So that's going to be put up for a proposal. Not up for proposal yet, but it will be. Meme coins. You've got LUNC up about 80% on the week. You've got Terra having a nice little run up 64%, but that's on the pairing to Luna Classic. Remember, these are all based on the pairing to Luna Classic. So you were better off holding LUNC. You were better off holding Terra over the last week. Finally, validators. We'll get to burns in a little bit, but finally, validators. Auto stake all nodes jockeying for that #1 spot. It's been a long time since we saw all nodes get dropped out of #1, and maybe it's time for them to start paying attention to what's going on, because let me show it to you finally. Now, guys, if you did not know, and I shared it on my X, you can go look for it yesterday, but we had what ended up being a very long conversation about USTD. This is the new UST protocol. USTD is going to be UST Defi, I think. Now, I don't think they've settled on the name. I had a joking reference to it. If you find it funny, good. If you don't, you're not from America, because it's funny in America. But UST Defi is what this is. It's a stable coin. This is, in my estimation, it's not a replacement for USTC necessarily and on the surface, but ultimately to me, it is a replacement for USTC. Okay, now, why does that matter? Well, I'm going to show you the white paper, and I'm going to show you why this is so important. First of all, 20% APY. This is the same as Tether. This is the same as USDC. This is a yield earner. And it's all done with smart contracts. It's all done autonomously so that there is no single finger in the pie. Now, of course, it's going to take auditing. It's going to take auditors. They will provide all of this information. But let me show you why this is a game changer. Okay, so there are things, and we're gonna touch on them. We're not going to dig deep. There's one part that we'll dig into just a little bit, but we're talking about automatic yield distribution to USTD holders. Now, you're going to earn passive income by just holding on to USTD. You don't have to do anything. You're just going to be able to make money by holding it, and they are going to use the same process as USDT. USDT, they post it publicly so that you know how to make money with a stable coin. They show you exactly what they are doing. They are open for you to review. So that's the important part. Now, there are a few things. Mint and burn processes are automatic, et cetera, and there's no lag in between. So there's no liquidity pool. There's no way for it to be hacked, which is a great thing. But the empirical yield analysis, this is what we're talking about when this happens. Here's the numerical breakdown of APR trends across multiple DEXs and stablecoin pairs. Okay, so the average APY, here's the average on each one of them. You can see how the current number is. Some of them a lot higher than others, but we're really just looking at that tether. That's the one that really matters. It's over 15% just on Ethereum. So there's some real opportunity here for gains. All you have to do is just hold USTD. Now, this is the tether to USD pair. Again, based on different metrics here, optimized APR, 1 day, 30 days. Here it is, concentrated liquidity edge. Don't reward idle capital by narrowing our liquidity band to the exact price zone where trades occur. I'm going to let you read through this because all I'm doing is just mumbling to you at this point. So I'm going to let you read through this, but this is telling you exactly what you need to know. Now, let's talk about it a little bit further. Now on chapter 13, which is the return on investment, which is, look, this is what we're looking for. And what this is going to show you is what your yield is, what your return on investment is, and you can see that right here. Now, with a total value locked of 1 million, the annual yield for the project. Now, this doesn't mean that we get as a unit $200,000 because it does cost to operate. So there is an operating budget. I suggest you go check this out. But here's the important part. So the annual yield on $1 million is going to be 200,000. It's going to cost a little bit more than that. It's going to cost about 265,000 to run for the year. This is an annual yield. So the return on that not going to be so much. But when we get to 10 million, then guess what? And here's why it's important to recognize 10 million. Because the annual yield then becomes at 20% APY, becomes $2 million, of which the net profit minus the 265,000 it's going to cost to run is 1.75 million. So boom, this is very good. And I'm going to show you why in just 1 second here. But what if, let's go to USTC. USTC currently sitting right now, fair dollar value, 71 million market cap. Now, why does that matter? USTC doesn't earn you anything, okay? You get nothing for USTC at this point. Now, why does this matter? Coming back over here, that means there's $71 million in this ecosystem devoted to USTC. Well, what if some of that gets it voted to USTD? Well, if that happens at $10 million, you are all of a sudden in profit. This is now a profitable enterprise. But let's take it a step further. Is it going to attract new people? Well, it's 20% yield off of something. And by the way, there's going to be some caveats to that, but you're going to be able to earn more from this than you will from USDT, more than from USDC. That's why this is being built. That's why this is going to matter so much. People are going to be incentivized to come back to the Terra Luna Classic blockchain. Let's say that we can get to 100 million. Well, that all of a sudden turns the yield into 20 million, which turns the net profits into 19.7 million, which is a 74x return on investment just for stablecoin. Now remember, stablecoin is creating yield, so and using the same concept. Now this is where it gets interesting, because the burn budget on this is where this is where the rubber hits the road, if you will. And let's do, again, 1 million in total value locked. The annual budget for burns would be 48,000, which means $4,000 a month would get burned. That's not a lot. We need to admit that that's not a lot. But also, along with that, half of it gets burned on USTC, half of it gets burned on LUNC. So when it gets to 10 million, that becomes $40,000 a month, which is significantly more. And then over here, there's 100 million is 4.8 million. That means $400,000 a month is getting burned. And we really have to look at what's the price right now. 4 zeros 58. 400,000 a month divided by 0.123458 today. That means that we would burn 6.8 billion tokens per month with no other protocol other than USTD. This is not market module. This is not the voluntary burns. This is not the systemic burns. This is none of that. This is just the yield from USTD. Do you see now what's going on? Do you see now how big this is? You amplify that for a 1-year period, and now you're talking about you've burned almost 83 billion of the supply. You might be asking yourself, well, that's not nearly enough. And you would be right in that context, but you're short-sighted, because what if it goes to 500 million? Okay, now when it goes to 500 million, guess what? That's where it gets crazy, because then it becomes 2 million a month. Now imagine, going back over here, imagine that we did this right here times 5, because there'd be 5 times as much. Now we're talking about 500 million in a year. And if we get to a 1 billion market cap valuation for whatever reason, okay, in just the stable coin, then we're talking about almost $1 trillion being burned per year. Now, I know that's not the answer that a lot of people want to see. You want to see just an incredible wipeout of it. And by the way, remember this scale, so that as the value increases, as the supply diminishes, the price is going to go up. This is just a raw number. It's not built on a curve. So, but this is to give you an idea of how much of a supply shock we might end up feeling in a very short period of time if this goes very well. Now, let's come down here and let's look at, there is a chart out here to give you an idea of what could potentially happen. See, again, with that $1 billion market cap valuation, you're going to burn 397 billion LUNC over the course of the year. My number was 413. I'm close, but I'm not exactly that. You know, it's if I'm rounding, I'm going to get a little bit closer. If I'm eyeballing it the right way, I'm going to get a little bit closer. But I'm just using the raw data. But also, I'm not including USTC in that mix. So what about USTC? Look at this. It would burn in 1 year at $1 billion market cap 17.87% of the supply, or 1.75 billion. 1.75 billion coming out of a circulating supply right here of 5.59 billion. By the way, this is debt that this is debt that USTC is carrying right now, with the expectation that it's going to go back to $1. So if we remove 1.7 billion from the supply, well, now we're down to 3.8 billion. 3.8 billion, still not serviceable as debt, still nothing much that we could do. But what if that happens over 2 years? Then it's a little under 2 billion. What happens if it's 3 years or 4 years? Suddenly, the supply of USTC goes back into the realm of, we could actually get this market cap at some point back to $1. Now, there won't be a lot of money on the table, I'll be honest with you, because a lot of it's going to have to be burned in order for that to happen. And at some point, there's going to be a crunch where you're going to have the diminishing returns. Again, we're not doing this on a curve. We're just saying that first year, 1.7 billion, and we're projecting it out with the same. It won't be the same because the price will go up. But you want price appreciation. I want price appreciation for you so that you sell, so that it then goes back into the pool and can be rebought, and we can continue to burn. So 20% is a huge number. It is going to drive people to the Terra Luna Classic chain. Now, you might notice I'm spending a lot of time on this today. It is because this is an imperative on this chain. This is, to me, one of the game changers. And by the way, let's not forget USTR, which is the ceramic project, is still out there. So we actually have things that are being built here right now that are going to fundamentally alter and change the way that Terra Luna Classic is currently doing business. That does not include, at this point, Juris protocol. So Juris is the new anchor protocol. That is your borrowing lending platform. What's going to happen when you hold your USTD? You earn rewards from USTD, and you're earning rewards by lending and borrowing on Juris protocol as well. How deep can your yields get? And that is why Terra Luna originally went absolutely nuts. Terra was the peg of $1 and Luna was the speculative asset. And guess what? It went from, I think it's important to kind of point this out here. I'm going to zoom and zoom and zoom and zoom and zoom. But when you come down here, at one point during the launch phases, whatever period of time you call it on Luna back here, the open price was like 40 or 50 cents, something like that. Then it just kind of meandered for a long time. Then it got a nice little run up to $22. That's That's a 44x from launch price. Then it came back down, consolidated in range at about $5, and then it got that explosive, incredible move up to almost $120. Now, why does that matter? Well, because that's how people were attracted to it. And this was an unsafe environment. When we create a safe environment for people to do the same thing they were doing before, and we can get the yields, they're not going to be perfectly right. They're not going to be the crazy yields that before. All we have to do, though, is beat the competition. That's what matters, right? We're not looking I don't think that as the stablecoin providers, they're looking for vast riches. They will get paid and they will get compensated. It stands to reason that any developer does get compensated, but they're not looking like Do Kwon at making massive amounts of exit money. The consequence of being better than other people, the consequence of using your yield to continue to reward people versus rewarding a bunch of developers, the consequence of that is a price pump. So that price pump is going to lead to a revival of the ecosystem. Again, 50 cents to $120. Just think about that. And by the way, 50 cents was the launch price. There were days when you come over here and you start to look at these charts, there were days when it was in 20-cent range. So if you bought the dip initially on launch, if you got in early on Luna, then you got a crazy, crazy, crazy life-changing, life-altering return. Now, the question is, did you cash out? Did you make a nice little profit along the way? Not everybody did. A lot of people in this collapse here did get wrecked. So, it stands to reason that we have to acknowledge that. But the point to it all is that, and by the way, this is the original Luna, going back to Luna Classic right now. Where is Luna Classic on the chart? And by the way, guess what? Did I call this or did I call this? This is exactly what I told you was going to happen, and it's exactly what is happening. I told you that my expectation was a breakdown, right? Now, the thing is, I don't think that it's done with the breakdown. Well, today, or in the United States for today and the next couple of days, we're going to be talking about another rate cut. We're going to see where the rate cut goes. But this is an opportunity for the bears to step in because now everybody's nervous about what's going on in the markets. This is where that dagger could get stuck. And then you get a nice little move from there, and it's probably going to be a much stronger move. It just makes sense to me, guys, based on the way the chart is forming right now, that we need one more breakdown into this range. My moving averages, look at the rejection that you got off of the top of that range. Look at the sell down that you got right there and the profit taking. By the way, any profit taking that's happening right here is actually from people who might have scooped up in this range or this range right here and then just got kind of tired of they made a little bit of profit and either they're moving on or this was enough and they saw an opportunity to scale back in, probably on a dip down here or deeper down here. I mean, that's the reality. The market, by the way, down $35 billion on the day. Yesterday, not a great day. You see that big red candle. So, again, not a great day. There's a lot of sell-off in the market, but all that sell-off is not into Bitcoin. What did I tell you guys was going to happen? Bitcoin was going to pump. So what are we seeing? Bitcoin pumping. So what I'm telling you is going to play out is what's playing out right now. So I hope you guys caught the messages. I hope you understood, and I hope that you DCA'd appropriately for that move. I mean, it's happening right now. I do think that Bitcoin is about to rip. It's at 115,000, while XRP has now dipped back down to $3. Ethereum has dipped back down to 4,500. Solana is back down to 235. Some of these have been liquidity just being sucked out in order to go back into Bitcoin right now. So that means same thing over here. And then what we're going to see, a dip and then a rip. That's what's going to happen. Now, volume, just kind of dead even on the day. USTC volume up quite a bit. But again, it's going to get a little bit crazy on USTC when all this happens, or at least in my opinion, when it happens. Now let's talk about burns real quick. 143 million. Did I just tell you about 7 billion in burns for the month if we have like just a decent 100 million market cap? Didn't I tell you like 7 billion? We're at 143 million right now. So what are we talking about? We're talking about significant growth in the burn process in this ecosystem, and it would come at an alarming clip if successful. Not to put too fine a point on this, but this is a paradigm shift for Terra Luna Classic. This is a paradigm shift, okay? The question now is, can we get all of these things up and operational? Can we throw up our tent poles? Can we really get this thing set up so that the market module is working and functioning and causing a burn process every month, so that the USTD is integrated and does same, and we can start seeing some diminishment of the supply, which does not require the market cap to go up for the value of the remaining supply to start increasing in value. So your tokens are going to get more valuable, your coins are going to get more valuable in that regard. And of course, your meme coins, your utility coins, they're going to get more valuable too, because there's more value for the remaining supply of tokens on the distribution. Now, the other thing to that is, what happens if people start to see that, people start to get excited, and people start to FOMO just a little bit? Then it's a parabolic run. That's what we've been waiting for. Okay, we're on this right now. We are on the edge of a breakout, and we're on the edge of a fundamental shift in the revenue generation model in Terra Luna Classic, and I am super excited. I hope that you are too. We'll be following up on this in the next couple days. I know this video went a little bit long, but this one's a game changer. So let me know what you think in the comment section down below, and remember, it's not financial advice, but I'm always right.